Listen closely, because what you're about to hear is not just another market update, not just another headline, and certainly not just another price milestone. This is the moment the world will remember as the day the financial system changed forever. Silver has crossed the $100 mark per ounce. And if you think this is just a blip, just a speculative spike, or just another chapter in the endless story of market volatility, you are missing the most important signal of your lifetime. This is not a rally. This is not a bubble. This is the end of a 45-year deception, a lie that has been carefully maintained by the world's most powerful financial institutions, central banks, and media empires. The dam has finally broken. The levee has failed. The manipulation machine that has kept precious metals suppressed for half a century has lost control, and the consequences will ripple through every corner of the global economy. If you're sitting in cash right now, if you're trusting the mainstream narrative that everything is under control, that inflation is transitory, that the central banks have your back, you need to wake up. The patient is dying, the elevator is falling, and the window to act is closing faster than you can imagine. I'm not here to scare you. I'm here to show you the truth, to lay out the facts, and to give you the tools you need to protect yourself and your family from what's coming. Because what's happening to silver is not just about silver. It's about the collapse of trust in fiat currency, the breakdown of the monetary order, and the greatest wealth transfer in modern history. Every second you spend with me in this video could be the difference between surviving the coming storm and being swept away by it. Let's start with the facts. As of January 23rd, 2026, silver has shattered its all-time nominal high, reaching 103.45 per troy ounce. Let that number sink in. For 45 years, the previous high, $49.95, set in January 1980, stood as an unbreakable ceiling. That peak was the result of the Hunt brothers' infamous attempt to corner the silver market, a story that has been used for decades to dismiss any talk of silver as a serious investment. It was a fluke, they said. It was a bubble, they said. It will never happen again. And for nearly half a century, they were right. The price of silver languished, manipulated and suppressed by a system that had every incentive to keep it down. But something changed. In October 2025, silver broke through that 45-year-old ceiling, surging past $51 per ounce. By the end of December, silver futures had hit $80 overnight. And now, just 3 weeks into 2026, we're above $100. That's a 38% surge in just 23 days. In 2025 alone, silver gained 146%. It more than doubled. Go back to January 2025, and silver was trading at just $30 per ounce. Today, it's $103. That's a 232% gain in 1 year. These are not the numbers of a normal market. These are the numbers of a system in crisis, a system that is losing control. And make no mistake, they tried to stop it. Every time silver approached a psychological barrier, $50, $60, $75, $90, you could see the fingerprints of manipulation all over the futures market. Coordinated paper selling, margin hikes, media blackouts, and endless reassurances from the so-called experts that everything is fine. But this time, it didn't work. This time, the physical market has decoupled from the paper market. This time, there simply isn't enough silver to go around. The vaults are emptying, the inventories are collapsing. And the price is telling you the truth that the authorities have tried to hide for decades. But the story doesn't end there, because what's happening in silver is just one piece of a much larger puzzle, a puzzle that, when you put it all together, reveals the true state of the global financial system. We are witnessing what I call the impossible signal, the simultaneous rise of stocks and gold. In a functioning economy, this should not happen. When stocks are rising, it means investors are confident in corporate earnings, economic growth, and the future. When gold is rising, it means investors are terrified of currency debasement, inflation, and systemic risk. These two assets are supposed to move in opposite directions. When one goes up, the other should go down. That's the natural order of financial markets. But right now, as I speak to you, both stocks and gold are hitting all-time highs. Gold is approaching $5,000 per ounce, while the S&P 500 continues to surge. And silver is outperforming both of them. This is the same pattern we saw in Weimar Germany in the early 1920s, when the stock market exploded upward in nominal terms while the currency collapsed. It's the same pattern we saw in Zimbabwe in the 2000s, when the stock market went to the moon while hyperinflation destroyed the currency. It's the same pattern we're seeing right now in Argentina and Turkey, where stock markets rise even as their currencies die. This is not economic growth. This is monetary death. This is what happens when central banks print so much money that every asset denominated in that currency rises, not because the assets are becoming more valuable, but because the currency is becoming worthless. The elevator isn't going up, the floor is falling. And if you don't understand this distinction, you are going to lose everything when the illusion finally shatters. Let me tell you about the supply crisis that nobody in the mainstream media is talking about. The global silver market has been in a structural deficit for 5 consecutive years. 5 years, let that sink in. Since 2021, global demand has exceeded global supply year after year after year. In 2025 alone, the deficit reached nearly 95 million ounces. That's almost 3,000 tons of metal, representing nearly 10% of global supply. In 2022, we saw the largest deficit on record, 272 million ounces. The Silver Institute projects that the cumulative deficit through 2025 has reached almost 820 million ounces. Now here's the math that should wake you up. In 2025, global silver demand hit an estimated 1.24 billion ounces. Total supply, including both mine production and recycling, was only 1.01 billion ounces. That's a deficit of over 230 million ounces, which is equivalent to the entire annual output of Mexico, the world's largest silver producer. And unlike gold, you can't just increase silver production when the price goes up. Why? Because 70% of silver mining is a byproduct of copper, zinc, and lead extraction. Even if silver doubles in price, miners can't easily increase supply because their operations are driven by base metal economics, not silver economics. New mining projects take 8 to 12 years to develop, and ore grades are declining globally. So we have 5 years of deficits eating into above-ground inventories. COMEX registered inventories in the United States are down nearly 70% since 2020. London Bullion Market Association vaults have lost around 40% of their holdings. Shanghai inventories have fallen to their lowest level in a decade. At current consumption rates, some industrial regions have barely 30 to 45 days of accessible silver reserves. Do you understand what I'm telling you? The world is running out of silver, the vaults are empty, the physical metal is disappearing, and when the music stops, when industrial users realize they can't get the silver they need to manufacture solar panels, electric vehicles, and AI infrastructure, the price is going to explode beyond anything we've seen so far. And now we come to the geopolitical bombshell that changed everything. On January 1st, 2026, China implemented new export restrictions on refined silver. Let me explain what this means. Starting this year, only large state-approved companies are allowed to export silver after obtaining special government licenses. To qualify, firms must have an annual production capacity of at least 80 tons of silver and a $30 million credit line. China released a list of just 44 companies approved to export silver in 2026 and 2027. Here's why this matters. China controls between 60% and 70% of the world's refined silver supply. Read that again. 60 to 70%. That means China, with one regulatory stroke, has taken control of the global silver market. According to state-run media, this policy formally elevates silver from an ordinary commodity to a strategic material, placing its export controls on the same regulatory footing as rare earths. Do you remember what happened when China restricted rare earth exports? Prices went parabolic. The same thing is happening now with silver, except silver is far more critical to the global economy. These export requirements effectively block hundreds of smaller and mid-sized exporters who have long served as key suppliers to global industrial users and refineries. If China reduces exports by just 50%, global deficits could exceed 5,000 metric tons annually, compounding the existing shortfalls we already talked about. And here's the nightmare scenario. In Shanghai, physical silver is now trading above $80 per ounce, while COMEX futures remain much lower. This price dislocation tells you everything you need to know. The physical market is starving for metal. Buyers are paying massive premiums just to get their hands on actual silver. Some traders are flying silver by plane rather than shipping it by cargo vessel just to meet delivery demand. Lease rates, the cost to borrow physical silver, spiked over 30 times normal levels during periods of acute stress. China has effectively weaponized silver. And they're doing it at the exact moment when Western economies are desperately trying to transition to green energy, electric vehicles, and AI infrastructure, all of which require massive amounts of silver. This isn't a coincidence. This is economic warfare, and the West is losing. Let's talk about why this supply crisis is about to get exponentially worse. Silver is no longer just a precious metal. It has become a critical green metal, with more than half of global silver demand now coming from industrial uses. According to the Silver Institute, industrial silver accounted for 60% of total demand in 2025. Let me break down where this demand is coming from. Solar energy. Solar panels rely heavily on silver's conductive properties. Every solar panel contains silver paste that conducts electricity. As governments around the world mandate the transition to renewable energy, solar demand for silver is skyrocketing. Electric vehicles. A standard EV has about 25 grams of silver. Larger EVs contain 50 grams. With global EV production accelerating, this represents hundreds of millions of ounces of annual demand. Electronics and data centers. Silver is used in circuit boards, contacts, and switches. As AI infrastructure expands and data centers multiply, silver consumption in electronics is hitting record levels. AI components have tightened the physical market to an unprecedented degree. Here's the critical insight. Unlike investment demand, which can fluctuate based on sentiment, industrial demand is structural and non-discretionary. Solar manufacturers can't build panels without silver. EV makers can't build cars without silver. AI companies can't build data centers without silver. There is no substitute that matches silver's unique combination of electrical conductivity, thermal conductivity, and reflectivity. This means that even if the price of silver goes to $200 or $300 per ounce, industrial users will still have to buy it. They have no choice. And here's the kicker. The Silver Institute forecasts that industrial demand will continue rising through 2030 as growth in solar energy, electric vehicles, data centers, and artificial intelligence drives consumption higher. So we have declining inventories, China restricting exports, and industrial demand that cannot be reduced. This is a supply-demand mismatch of historic proportions, and it's just getting started. Now let's talk about what's happening on the investment side, because this is where things get truly explosive. Inflows into silver exchange-traded funds have surged by 187 million ounces so far this year. Individual investors poured $922 million into silver ETFs over just 30 days. The iShares Silver Trust recorded $69.2 million in retail inflows on January 14th alone, the second largest single day of buying on record. Why are investors stampeding into silver? Because they see what I'm showing you right now. They see 5 years of supply deficits. They see China weaponizing exports. They see industrial demand exploding. They see central banks around the world printing money at unprecedented rates. They see geopolitical tensions escalating with Trump's tariff threats against Europe, military tensions with Iran, and trade wars with China. They see the gold-silver ratio compressing from historical highs down to around 50, which means silver is finally catching up to gold's performance. And they see mainstream analysts, the same people who told them silver was dead, now scrambling to raise their price targets. UBS lifted its silver forecast for mid-2026 to $55 per ounce, up from $47. Metals Focus expects silver to hit $60. The London Bullion Market Association's 2026 forecast survey indicates that professional analysts expect the average annual price of silver in 2026 to double compared to 2025. And here's the bombshell. Keith Neumeyer, CEO of First Majestic Silver, has repeatedly stated he believes silver could hit $100 to $130 per ounce. Well, we're already at $103. Felipe Geisels at BNP Paribas said it's certainly possible for silver to reach $100 by the end of 2026, stating, "We are still closer to the beginning than to the end of what could well become one of the largest bull markets in recorded history." But here's what Wall Street isn't telling you. If gold reaches $10,000 per ounce, and many analysts believe it will, and the gold-silver ratio stays at 50, that puts silver at $200 per ounce. If the ratio compresses further to 40, which happened in previous bull markets, that puts silver at $250. And if we adjust the 1980 silver peak of $49.45 for inflation, it would equal approximately $194 per ounce in today's dollars. So even at $103, silver is still undervalued on an inflation-adjusted basis. Let me deliver the verdict because time is running out and you need to understand what's at stake. What we're witnessing is not a normal market cycle. This is the great silver squeeze of 2026, a confluence of forces that happens once in a generation, maybe once in a century. You have collapsing inventories, 5 consecutive years of deficits, China weaponizing exports of 60-70% of global refined supply, exploding industrial demand from solar, EVs, and AI that cannot be substituted, investment demand surging as confidence in fiat currency collapses, geopolitical tensions creating safe haven flows, central banks printing money at rates that would have been unthinkable a decade ago, and a 45-year price suppression regime that has finally broken. The physical market has decoupled from the paper market, lease rates are spiking, premiums are exploding, vaults are being drained, and the banksters who have manipulated this market for decades are losing control. This is the moment. This is the inflection point. And you have a choice to make right now. You can stay in cash, in dollars, in euros, in government bonds, assets that are being systematically destroyed by money printing and inflation, or you can get into the lifeboat. You can recognize that we are entering a paradigm where physical scarcity defines value, where real assets outperform paper promises, where silver and gold are not relics, but life preservers in a sea of monetary chaos. I want you to understand something. precious metals advisors typically recommend allocating no more than 10% to 15% of your portfolio to silver and capping total precious metals exposure at 20%. That's prudent, that's conservative. That's what you should do if you want to protect your wealth without taking excessive risk. You can buy physical silver, bullion bars, rounds, government-minted coins like American Silver Eagles and Canadian Silver Maple Leafs. You can buy silver ETFs if you want liquidity and convenience. You can buy shares in silver mining companies for leveraged exposure. But the key is to act now before the masses wake up, before the supply crisis becomes undeniable, before silver hits $150, $200 or beyond. Because here's the truth that the mainstream media will never tell you. The patient is dying, the dollar is dying, the euro is dying, fiat currency is dying, and the only question is whether you'll recognize it in time to save yourself. Silver above $100 is not the end of the story. It's the beginning. The dam has broken, the levee has failed, and the flood is coming. Get out of cash, get into the lifeboat, and prepare for the greatest wealth transfer in modern history. The choice is yours. But the clock is ticking, and time is the one thing you cannot buy, even with all the worthless fiat currency in the world.